Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Thursday, and it's St. Patrick's Day, March 17th. Hey, happy St. Patrick's Day to you all. Just jump right in here. We got a few economic news releases to go over today, and we'll start off with the weekly jobless claims. So last week we had 258,000 people apply for unemployment, which was a great number back then. Forecast is supposed to go up to 268, and it came in at 265, so a little bit under the expectations or forecast, which is obviously good news. But really good news is here, Philly Fed, which is manufacturing in the Philadelphia region. We've been having a lot of negatives in manufacturing. And earlier this week we had the Empire State or New York region came in as a positive for first time in a while. Now Philly Fed does the same thing. We had a negative 2.8 back in February. And the forecast is supposed to stay in the negative at half and exceed that and jump way up there to 12.4. So great numbers out of manufacturing numbers coming out of Philadelphia this month. Job openings. We ended up the year at 5.6 million. So January is starting off at 5 indicators. We had a negative back in January at negative 0.2%. And that went up into positive territory. So good overall numbers here. So data is looking positive here. Not a lot of people applying for unemployment. So jobs seem to be improving in that capacity. We have manufacturing showing some improvement, and then leading indicators, which is kind of showing us the way of the economy kind of projecting to go upwards, which is all good news for data. The stock market's a little mixed today. The Dow and S&P is up, while the Nasdaq has been down a little bit. Oil is up, and it's up just over at $39 a barrel right now, which, of course, we've been seeing that pretty much this whole entire year so far, dictated by oil. So when oil has gone down, the stock market's gone down. When oil's gone up, the stock market's gone up. As for yesterday, we had the Fed meeting, FOMC. They gave their announcement. The two big highlights out there is that they basically revised their version of their plot map to show 2 rate hikes expected to be this year versus 4. And then also a lot of it stems from global concerns. It seems like Europe and everybody else seems to be slowing down in China, slowing down, and that may have some adverse impact on the U.S. here with our growth pattern here. So a lot of people thought we would grow 2.3%, but as we've been kind of seeing on retail sales and some of these other things, or GDP, it could be, it's possible it could be a little slower unless it starts taking off. Let's see how bonds are doing, and as you can see, after the market changed yesterday, we were actually down below the resistance level, and we shot right up. We closed up about 31 basis points yesterday, and then we have opening gap this morning, and currently we're up about 13 basis points from where we left off yesterday. So we had a price improvement during the day yesterday. Now we got another improvement in our pricing again today, as you can see us higher up on the bond market here. So that's good news for people who are looking for interest rates or shopping for interest rates, whether it's they're looking to buy or refinance. Interest rates are better today. All right, folks. Again, tomorrow will be a little lighter. We got, I think, one news report tomorrow. But again, we'll just kind of wait and watch to see how this projection. Right now, I would be a little cautious here. We could have, that with that opening gap, we could close that up at some point and come down before it goes back up again. So, be a little cautious. It could come in a little bit, but that could shorten up a little bit where we'll get slightly worse pricing before we go up again. All right, you guys have a wonderful day. Thanks so much for watching, and we'll see you guys tomorrow. Take care.